Start of the easing cycle is yielding more gains for an already strong market. You're taking a look at futures up across the board. All three of the major averages on track to start the day in the green. You've got the NASDAQ futures leading the way. We're seeing a lot of that excitement play out within the tech sector. The Fed's aggressive 50 basis point cut. Now, comes after we got that news. The move is surprising markets as traders question whether or not the Fed is behind the curve a bit. Powell addressing those concerns yesterday afternoon.
We don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind.
The central bank is reigniting its rate-cutting cycle. Can the Fed pull off a soft landing? We want to bring in Kathy Bostjancic as Nationwide Chief Economist and Senior Vice President. Kathy, it's great to have you here at the desk with us. Let's start with Powell's comments that we just heard, really reiterating the fact that they're confident that we are going to be to achieve a soft landing and avoid a recession. What do you think?
Well, happy to be with you. We hope that's the case, right? We want to root for the soft landing, and we hope that indeed cutting rates, as aggressively as they did underwrites that soft landing. And indeed, that's our own forecast. But there are real risks around that. And some of what was just discussed, you're seeing global growth, global commodities soften. And yes, the labor market right now looks to be in decent shape. However, we know that, that we've seen employment gains narrow, and we've seen a slowing in hiring that could be a precursor to much more deterioration in the labor market. Now, to his point, Chairman Powell's trying to get ahead of that, and great, but there's always the risk that they've been a little too slow in doing this.
And so with that in mind, now we're looking at a tapering type of scenario, a big cut out front and then potential tapering down to 25. And for how long those 25 basis point cuts get played out is anybody's guess. What is your estimation of how long in the duration of the cycle and when we might get some communication about even the terminal rate? It might be too early to talk about that.
No, great questions. And it's not too early because people are talking about that, and the markets are trying to, reach for that. Where will we actually, end in terms of the rate level? Our own forecast, actually, the Fed has come in line with our own forecast, and actually has come in line with the markets. But, our projection, just like the Fed, is based on mere theory, like getting back to a neutral rate. Over time, inflation continues to ease. But as Dennis Lockhart said, in reality, that doesn't usually play out that way. We get something unexpected. But, this is about, at the heart of it, it is about inflation slowing. And if it continues to ease, interest rates should be lowered in line with that. I look at the employment data, labor market data, as telling us how they really need to calibrate the size of those rate cuts. And do they go quicker because we do see this slowing in the labor market? That's not what the Fed is forecasting. Or do we continue to kind of cruise along, above 100,000 jobs each month? And then that means we're on path for a soft landing. But that's where I really look to the labor market data to give us, the direction there.
Kathy, if they were to go 50 again at the next meeting, talk to us about the risk that could then be associated with it if they were to go too far too quickly.
Yeah. So, they have to balance this, because if they go too quickly, you have a chance that you could reignite economic activity and inflation gets stuck above the 2% target. And that's something they really do want to avoid. And that would be the risk. But I think, if you look at the inflation data as we do, from the bottom up, we, like the Fed, have a lot of confidence that it is trending lower. And I don't see that big risk. I actually think the Federal Reserve should go 50 basis points to the next move. That's not our forecast, because we have to forecast what we think they'll do. But just like this meeting, they can show flexibility, and they're far from neutral. So cutting 50 basis points is not necessarily a sign the economy is falling apart. It just is a recognition that policy is just too restrictive.